$152 million. That is what Goldman Sachs just disclosed in fresh XRP ETF positions, spread across 4 different funds filed with the SEC yesterday, made public today. The single largest institutional XRP ETF holder on the planet just doubled down, and XRP is sitting at $1.36. I spent the last 48 hours in the data trying to understand exactly why that disconnect exists and what it actually tells us about where this price has to go. And the answer is not what most people in this space are talking about. Before we get into it, subscribe if you want XRP analysis that actually gives you a plan and not just hype, because what I'm going to show you today is pure arithmetic. It is not vibes, it is not hopium, it is the structural math that Goldman Sachs understands and that most retail XRP holders have never seen explained properly. Let me set the scene. Today is March 27th, 2026. This is the SEC's 240-day maximum deadline for the remaining batch of spot XRP ETF applications. 7 spot XRP ETFs are already live. They have pulled in $1.44 billion in total inflows since November of last year. Goldman Sachs holds $152 million across 4 of those funds: Bitwise, Franklin Templeton, Grayscale, and 21 shares. That Goldman position is larger than the next 29 institutional holders combined. Millennium Management came in second at $23.1 million. And despite all of this, XRP is down more than 40% in 2026, down from $2.40 in January to $1.36 right now. The Fear and Greed Index is sitting at 14. Extreme fear. XRP ETF weekly inflows have dropped from $200 million at launch to under $2 million by early March. This is the most important question in the XRP space right now, and almost nobody is answering it properly. So here is what I found. There is a concept that rarely gets discussed in crypto YouTube, and when I trace the on-chain data, trace the ETF flows, and look at what institutions are actually doing versus what the community is reacting to, this concept explains everything. It is called liquidity depth. And once you understand it, the Goldman Sachs buy makes total sense. The price sitting at $1.36 makes total sense, and the direction this has to go becomes less a prediction and more a structural requirement. Think of XRP's market like a pool of water. The water in that pool is the capital available to absorb large trades. Right now, if a major bank wanted to push $100 million through XRP in a single transaction, what happens? The pool is too shallow, the order is too big for the market to handle cleanly. You try to buy at one price, but because your order is larger than the available liquidity, the price moves against you before your order fills. In traditional finance, that is called slippage. In XRP right now, analysts estimate that moving $100 million through the network would cost approximately 10% just in slippage. That is $10 million gone before you have moved a single cent across a border. Compare that to institutional equity markets, where moving $100 million costs less than half of 1%. Right now, XRP loses that comparison badly. If you like what you're hearing, smash that like button, because this is where it gets real. So how do you fix the pool? Here is where Goldman Sachs and every smart institutional money manager understands something that retail hasn't priced in. You cannot print more XRP. There are a fixed number of tokens. The maximum supply is 100 billion XRP, and 61.3 billion are currently in circulation. So the only lever available to make the pool deeper, to reduce slippage to levels where institutions can actually move real institutional-sized transactions, is price. If XRP is worth $1.36 and you need $100 million sitting in the pool to absorb a trade, you need approximately 73,500,000 XRP tokens available and liquid. That is an enormous amount of the circulating supply tied up in a single transaction. But if XRP is worth $10, that same $100 million trade only requires 10 million tokens. Same dollar amount moving, way less stress on the pool, dramatically less slippage. This is not speculation. This is arithmetic. The price has to rise for the network to do what it is designed to do. And now layer in what is happening to supply at the exact same time. Goldman Sachs bought $152 million in XRP ETF shares. Those shares represent XRP tokens that ETF providers like Bitwise and Franklin Templeton have purchased and locked in cold storage. Those tokens do not trade anymore. They are pulled off the market. They cannot be used to settle transactions or provide liquidity. Every institutional buyer that comes in through an ETF wrapper is effectively removing XRP from the available supply. On top of that, Grayscale is working to convert its $2.1 billion XRP trust into a spot ETF. If that conversion happens, that is an enormous block of XRP that gets formally locked up in ETF structure, more buying pressure, less available supply. Now stack the Clarity Act on top of all of this. Brad Garlinghouse puts the odds of passage by late April at 80%, Polymarket has it at approximately 70%, Standard Chartered has a 2026 target of $2.80 without the Clarity Act and $8 if it passes. The reason the range is that wide is exactly because of the liquidity math we just walked through. If the Clarity Act passes and US banks can formally hold XRP on their balance sheets as a commodity asset, those banks become institutional buyers of enormous size, and every dollar they commit pulls more tokens off the available market supply. When demand goes up and supply goes down simultaneously, prices do not drift up gradually. Historically, they gap up because at some point, there are simply not enough sellers willing to part with their position at current prices, and buyers have to pay whatever the next seller demands. The SEC and CFTC already took the first step on March 17th, 10 days ago, when they jointly classified XRP as a digital commodity alongside Bitcoin and Ethereum. That is the most consequential regulatory development in XRP's history. Banks can now treat XRP like they treat gold or oil. The compliance barrier that kept hedge funds and asset managers out for years is gone. But that classification is currently administrative guidance. It can be unwound by a future administration. The Clarity Act would make it permanent statutory law. That is the difference between a door being open and a door being bolted open. Goldman Sachs buying $152 million right now at $1.36 tells you something important. They are positioning before the bolt goes in. This is not financial advice. I always want to be clear that I am sharing what I am personally looking at in the data. You do your own research and make your own decisions. Here is the number that should frame everything for you. XRP ETFs currently hold approximately $1 billion in combined AUM. Bitcoin ETFs hold close to $100 billion, roughly 5% of Bitcoin's total market cap. XRP ETFs represent just 1.1% of XRP's market cap. The gap between those two numbers is not because institutions don't want XRP. Goldman's $152 million position proves they do. The gap exists because the regulatory and legislative infrastructure was not complete. March 17th changed that. March 27th, today is the SEC deadline that potentially expands the pool of approved ETF products even further. If the Clarity Act clears the Senate Banking Committee in late April, analysts project $4 to $8 billion in new XRP ETF inflows in the second half of 2026. That is the scenario that closes the gap between 1.1% AUM penetration and something approaching Bitcoin ETF levels. Share this video with one XRP holder who keeps asking why the price isn't moving despite all the good news. The liquidity math is the answer they need. Now let me give you the honest tension in this thesis. Weekly ETF inflows dropped from $200 million at launch to under $2 million by early March. That is a real concern. The market is waiting, not committed. Goldman Sachs's $152 million position was captured in a Q4 2025 filing, meaning it reflects their posture from when XRP was trading significantly higher than it is today. Whether they maintain that full position through the 40% drawdown will not be known until Q1 2026 filings drop in May. That is a structural limitation of 13F analysis that the community often overlooks. There is a chance Goldman trimmed. There is a chance they added. We do not know yet. What we do know is this. 7 spot XRP ETFs are live. $1.44 billion has already flowed in. XRP now has commodity classification from both the SEC and the CFTC. Ripple Prime went live on DTC's National Securities Clearing Corporation on March 2nd. The Clarity Act has 80% odds according to Garlinghouse and 70% on Polymarket. Every piece of infrastructure XRP needed is either in place or weeks away from being legislated into permanence. And Standard Chartered's Jeffrey Kendrick, whose $28 2026 target has become the institutional bull case benchmark, argues that the February sell-off actually strengthened the long-term setup by removing over-leveraged positions and creating a cleaner base. The liquidity math points in one direction: fixed supply, tokens leaving the market into ETF cold storage, growing institutional demand, fast 3 to 5 second settlement that makes XRP's pool more efficient than Bitcoin or Ethereum, and a Clarity Act vote that could be the trigger event. The pool gets deeper one way. Higher price per token. Goldman Sachs filed $152 million in that direction yesterday. Comment below, are you still accumulating XRP at these prices, or are you waiting for a catalyst before your next move? I want to see where this community stands right now. And if you want me to break down the full Clarity Act timeline and what happens to XRP the moment it clears committee, comment clarity below and I will make that the next dedicated video. I cover the data here that most channels won't touch. Subscribe so you don't miss what's coming.